Have you ever entered a trade and seen the market hit your stop loss, then move exactly the way you expected? Annoying, right? Well, that's not bad luck. It's called the stop hunt. And today I'll show you how to turn that trap into a profitable strategy. This strategy is simple to understand even for beginners, and I'll guide you step by step, so after watching, you'll know exactly how to use it and start trading immediately. No time to waste, let's get started. Roadmap of this video. And here's what you will learn. What a stop hunt is. How to spot key levels. How to use RSI to filter trades. How to set a stop loss and take profit. What is a stop hunt? Let's look at an example. Imagine the price hits the same level several times, maybe a support or resistance. Next time the price comes to that level, you expect it to reverse again. So you place your stop loss just below for buy or just above for sell that level. But then something happens. The price first hits your stop loss, and only after that it reverses and continues in the direction you expected. This is not luck. Big institutions, the one with large amount of money, push the price to trigger those stop losses. They create pressure, the stop gets hit, and then the price goes back in the original direction. This trick is called a stop hunt. The good news, we can actually use this to our advantage. By knowing where stop hunts happen, we can plan our trades to get high win rate opportunities instead of losing to the hunt. Finding the key level. Step 1. Spot a clear support or resistance. If you can see it, big players can see it too. These are the levels where stop hunts happen. On your chart, check highs or lows that got tested a few times. These spots give you the best chance to use this strategy successfully. Find the breakout and the trap. After finding a key level, wait for the price to approach your key level. Look for a big candle like a Morobozo or any big body candle breaking through it. Now there are two possibilities. One, a stop hunt happens. It means price slightly goes through the level and then returns. In this case, the breakout is fake. 2. The breakout is real and price continues higher. Now to be ready for both possibilities, we place 2 stop orders around the broken level. Before we continue, if you're not familiar with these terms, a stop order is simply an order set at a specific price. It only triggers if the price reaches that level. There are 2 types of stop orders. Buy stop, a pending buy order placed above the current market price. Sell stop, a pending sell order placed below the current market price. Resistance, place a sell stop a little below the resistance. If the market does a stop hunt and reverses down, this order will be triggered. Place a buy stop just above the resistance. If the breakout is real and the price continues higher, this order will catch the move up. Note, when one order is triggered, the other is cancelled automatically. This rule applies to both resistance and support. Support. Place a buy stop a little above the support. If the market does a stop hunt and then reverses back up, your order will catch the move. Place a sell stop a little below the support. If the breakout is real and the price continues lower, your order will get you into the move down. With this setup, you can trade in both directions safely and confidently without guessing which way the market will go. Adding RSI filter. Now here's where we make this strategy much stronger than the usual stop hunt method. We add the Relative Strength Index, RSI. Here's the rule. When price breaks a resistance, if RSI is above 70, the market is already overbought. Buyers are too many and the price is stretched. In this case, the breakout is more likely a fake breakout or a stop hunt. If RSI is below 70, the market is not yet overbought. There's still room for buyers. Here, the breakout has a higher chance of being real. When price breaks a support, if RSI is below 30, the market is already oversold. Sellers are too many and the price is exhausted. In this case, the breakout is more likely a fake breakout or a stop hunt. If RSI is above 30, the market is not oversold. There is still room for sellers. Here, the breakout has a higher chance of being real. So, in summary, when price breaks a resistance, if RSI is above 70, the breakout is usually fake because the market is already overbought. But if RSI is below 70, then the breakout can be real. On the other side, when price breaks a support, if RSI is below 30, the breakout is usually fake because the market is already oversold. But if RSI is above 30, then the breakout can be real. This filter removes a lot of false signals and helps us only enter the highest probability trades. For those who aren't familiar with RSI and the terms overbought and oversold, we have a separate playlist called Mastering the Basic RSI. I'll put the link in the description. Be sure to check it out. Examples on real chart. Let's look at a real chart example. The price has tested the same resistance level twice and bounced back, so we might expect it to reverse again. Now when we check the RSI, if it's above 70, there's a higher chance that the breakout is fake and the price may reverse down. But because of stop hunts, we don't jump into a short trade immediately. Instead of going straight down, the price might first push higher, hit our stop loss, and then move down. On the other hand, there's still the possibility that the breakout is real and the price keeps moving upward. To be ready for both scenarios, real breakout or fake breakout, we place two stop orders. A buy stop just above the resistance in case the breakout is real and the price keeps going up. A sell stop just below the resistance in case the breakout is fake and the price moves down after trapping traders in a stop hunt. In this example, the price triggered our sell stop order and the sell stop order is converted into a sell order. Once that order was activated, we canceled the other one. Set the stop loss just above the breakout candle and set the take profit at twice the stop loss. The price then continued downward and hit our take profit. This shows how stop orders and planning for stop hunts help you trade more safely and with more profit. Even if breakout doesn't play out as expected, your setup is ready for both outcomes. In this video, I show you just one example on the resistance level. I shared the second one on the support level in a short video later this week, so don't miss it. If this helped you, smash that like button. Your likes mean a lot and keep me motivated to make more videos. Want more strategies like this? Check out my other videos. Till next time, happy trading!